The start of April's first week ushered in a false break to $47,400, indicating the bull's failure to hold price above an established high. This failure resulted in a double top formation, hinting demand is dropping, and it was only a matter of time before the formation led to a reversal. A lot of these drops could be tied to the relentless rally in the dollar with little or no corrections. What's peculiar to note is that the dollar broke out of a bull flag, whereas Bitcoin is now stuck in a bear flag whose breakout direction could be downwards. As is often the case with any market where two uncorrelated assets later become correlated in future, we may witness the same between Bitcoin and the DXY. But for now, the die is cast. I'm Grace Joseph and this is the Gracia Memoir Session. If you'd been uncertain or in disagreement that we are in a bear season, it's time to accept the glaring truth. As long as the dollar keeps reaching new milestones due to strong fundamentals, there is a slim chance there will be major rallies in the crypto market this year. Focus on the chart and forget about the occasional whale buys by certain companies, all in a bid to drive prices. Now, the first real chance Bitcoin had to rally to 51k, it didn't make it all the way. I'm not saying it's never going to hit 51k again, but right now it's struggling to maintain its range, so that will be a tough feat to take on. Here's why. Our former symmetrical triangle pattern has reversed its role to become a bear flag. If you know anything about bear flags, you'd agree a breach of the flag support often creates a price move that is just as extended as the flag's pole. Remember, the dollar had created a bull flag before its breakout, which means another major advancement is coming. Even though the DXY will correct at some points, you just have to agree both markets are doing the opposite of the other. Hopefully we'll be entertained by the speed at which the dump will occur, since declines are faster than spikes due to a more powerful emotion of fear than greed. If you take a walk memory lane and specifically February 3rd week memoir session, you'll recall I'd hinted the market moves in cycles. March was the month for a relief rally, hence more declines can be expected in April, May and June, with another relief rally in July. But hey guys, things are not so bad on the weekly and monthly time frames, if I must admit. Right now we are leveraging on the weekly candles close to reinstate the bullish notion of the market. The current candle needs to close above 43k to maintain a higher low. Contrastingly, a weekly close below 43k could trigger the bearish effect of the evening star, thereby tanking price to 38k if not lower. Our EMAs on the weekly and monthly time frames are doing a great job at supporting price, which hints we can expect more upside move in the short term, especially if 43k holds. And over 20 days before the monthly candle closes is a long time away to see what we are in for the next few months. So, will it be a decline from our current 43k zone or a bounce to 51k before a final dump? Let's see how things unfold. Although price is in a short-term uptrend, the choppiness of the rise hints that this could still be a corrective move in a secondary trend. Let it lock at the back of your mind that we will soon be completing wave B from a corrective wave A, B, C. Apart from price and time, volume is also important to consider. And in this case, the volume from the 5 waves in A is clearly higher than what we are getting in this wave B. Nevertheless, if we get anything above a 61% correction, I'll have to stop and think if this isn't a new trend forming. But spoiler alert, some corrections go as far as 100% retest, thereby creating a double top, so don't hold your breath because I sure don't plan on it. That will be all for now until next week on another session on Gracia's Memoir. I'm Grace Joseph and you are onto the Gracia Memoir session.